Hi everyone, my name is Mary Redmond. I'm talking right now about the Euro-US dollar pair. The reason I like this short this week, just from the 1.445 level, simply for a few simple reasons. It made a 1,000 pip move down during May, and now it's up against the 50% Fibonacci retracement level of 144.5. So I think it's going to take a lot of momentum in the euro in order to be able to make a clear cross above this and move up to the next level of above 45 or 145.69. And I doubt that it'll happen over the next few days. Of course, it's always possible, but since it's already had a 500 pip retracement, it may be due for a pullback, and it's probably not going to happen when there's an ECB meeting next week. And in addition, where we're seeing really across the board a slowdown in global growth. The US ISM manufacturing came in slightly below estimates at 53.5, and anything above 50 does show an expansion. But you know, the purchasing managers indices, which were released this week for the EU and for Great Britain, the UK, as well as in China, all of these indices did show a slowing of growth. And it showed that there is an expansion, but we're coming up to a period which may be a slightly slower growth rate than we saw in the first 2 quarters of 2011. So we also had a reading from the EU for the estimated EU Consumer Price Index this week, which came in at 2.7%. So that's still a level at which the ECB is expected to raise rates this year. But it's probably not clear exactly how many rate increases they're going to do. The markets always swing too far to estimate too much one way or the other. And of course, we're hearing about these this ongoing political problem with the bailouts of Greece, whether or not the IMF is going to come up with their next tranche or Germany is going to come up with their next tranche. And I think the markets are anticipating, and everybody's assuming that, of course, that somebody's going to come to the rescue. I don't think that they want a real default, but while this is hanging over the market, and we're not going to hear about the real final result of the examination of the Greek finances and whether or not they're going to do some type of restructuring, probably till the end of June, it's going to put some weight on the euro. And of course, we've got issues putting weight on the dollar too. I mean, we've got this ongoing debate about the U.S. debt ceiling, and then we've got the Fed, which is going to be probably ending the quantitative easing at the end of June, but perfectly content to stay on hold for a while. It's not likely that they start removing the securities from their balance sheet. They've given it the indication that they're perfectly content to just watch what develops over the next few months. And some analysts are already speculating about an additional round of quantitative easing, but it's probably too soon to think about that, and we probably wouldn't have that unless we had some other type of contraction or real losses in employment. I think if there's employment growth, even if it's slow, then they're probably just going to stay on hold without quantitative easing. So people are going to start anticipating that when that ends, that some of the incredible weight that's been on the dollar is going to be removed. So I'm just thinking that the euro right up here, if you go into a 4-hour chart of the euro-US dollar, it's going to take a lot more momentum to break this level than we probably will see this week. So I think it's possible we might just see a pullback, 100 or 200 pip pullback here. And of course, we also have to look at what's going on in the stock market. And you can see that today, which is Wednesday, the market's down. But the volatility index, it didn't really spike up that much, and it made a 1-point spike up. So you're probably going to have to see, before you see another type of real correction, you're probably going to have to see the VIX spike up to maybe the $18 or $19 level, and then it might be time to go in and buy the stock market again, or buy the riskier assets like the Australian dollar or the euro-US dollar pair. But right now what you have is more than real panic selling. You just have a lack of buying momentum in a range-bound market. So in the range-bound, as I said, I do favor a slight short to the upside for the euro-US dollar here. Above 144.30, I think it's probably a good level to get in. And again, we've got an ECB meeting coming up next week, so the week before these central bank meetings, you usually don't see big breakouts one way or the other. And of course, everybody's going to be waiting to see what Mr. Trichet says. He usually doesn't talk at all about the sovereign debt problems, but you know, if he continues his hawkishness on inflation, then we could see another move up in the euro. And in addition, though, we saw the Purchasing Managers Index show a slight slowdown in the growth rate in the U.S. We also saw a slight slowdown in the growth rate in Germany and France, although the economies are still growing strongly, and we saw a contraction in some of the EU countries. So they may have to deal with this disparity in the future, and it's going to be hard for the ECB to justify rate increases when you've got some of their countries which are really growing strongly and some of the others which are facing recessions. So that's what I'm thinking for the euro this week, although I probably don't expect another big 500 pip move down, maybe until next week.